Hello everyone, and thank you for joining today's webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. Risk disclaimer, true webinar house rules. Let me start by sharing a little information about myself. I am a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an analyst, I'm also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elite Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the main topics that we are going to cover inside today's webinar. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. Number one is the UK Construction PMI, the GBPUSD outlook. The date was August 6, 2025. The second one is the unemployment rate Canada. The currency pair we're going to discuss is the USDCAD. The date was August 8. Now, let me start with the first one, Construction PMI. What is the Construction PMI? The Construction Purchasing Managers Index, or PMI, is a leading indicator of economic activity in the UK construction sector. It is derived from surveys of purchasing managers covering employment, output, new orders, and supply chain conditions. A PMI reading above 50 signals expansion, while a reading below 50 indicates contraction. The construction sector plays a significant role in the UK economy and is sensitive to interest rate policy, business sentiment, and overall demand. The key figures are uh, the data release we got is the previous number was 48.8, the forecast was 48.9, and the actual number we got is 44.3, which is quite less. That is why it is written in red color. Now, the market reaction is that the August reading plunged to 44.3, far below both the forecast and the previous month's level, making the sharpest contraction in the sector since the last major slowdown. Such a weak figure typically weighs on the pound as it signals deteriorating business conditions and potentially weaker GDP growth ahead. However, GBP USD moved higher immediately after the release, suggesting that the traders were focusing on other market drivers. Let me show you the chart of GBP USD currency pair. So this is what happened. We got the news release over here on August 6th, and market actually rallied up. So this thing suggests that traders were focusing on other market drivers, such as broader US dollar weakness, short covering, or anticipation of more accommodative policy from the Bank of England that could support domestic demand. Now, the interpretation we got is the significant drop in the number from 48.8 to all the way down to 44.3. That's a significant drop. Okay. And this significant drop in number highlights mounting pressure in the construction sector, likely linked to high borrowing costs and softer investment. The market's counterintuitive bullish reaction for GBP/USD underscores how the currency moves often reflect a mix of fundamental data and broader market sentiment, not just the headline figure. So the conclusion is, while the PMI result points to economic stress in the UK construction industry, the GBP/USD's bullish price action shows that traders were pricing in other forces, possibly shifting focus towards US data releases or global risk sentiment. The divergence between data and price action serves as a reminder that in Forex markets, context is just as important as the numbers themselves. Okay, the next one is the unemployment rate in Canada, the USDCAD, and the date was August 8, 2025. Now, what is unemployment rate? The unemployment rate measures the percentage of Canada's labor force that is unemployed but actively seeking work. It is a key gauge of economic health and labor market dynamics, and it plays a major role in shaping the Bank of Canada's monetary policy decisions. Now, the number we got is 6.9. The previous forecast was 7.0. That was the previous numbers and forecast, but the actual number we got is 6.9%. Now, typically speaking, a declining unemployment rate signals economic strength and can promote the Bank of Canada to maintain or raise interest rates, supporting the Canadian dollar. Conversely, a rising unemployment rate points to economic weakness, increasing the chances of rate cuts and waiting on the CAD. The unemployment rate matched the previous reading at 6.9%. Let me show you the chart of USD CAD currency pair as well. This is the USD CAD currency pair daily time frame. And what we got is that after the 8th August number, we got a bullish leg over here in price action. Okay. Now the 6.9% reading we got is slightly better than the forecast of 7.0. On the surface, this should have been supportive for CAD. However, the USD CAD moved higher after the release, suggesting that traders were reacting to other elements of the labor report, such as weak wage growth or reduced participation, or to broader US dollar strength. So the interpretation is the headline data signals stability in the Canadian labor market rather than the deterioration that some had anticipated. So some traders basically anticipated that the headline data signals stability in the Canadian labor market rather than the deterioration. Okay, the CAD's immediate weakness, despite the stable jobless rate, highlight the importance of looking beyond the headline number. The soft underlying details or the global market sentiment can override initial expectations. So the conclusion is, while the unemployment rate itself offered no negative surprise, the USD CAD upward move shows that Forex market weigh multiple factors, including the tone of the broader labor report, commodity prices, and global risk trends. For Forex traders, this release is a reminder that context and underlying details matter, such as we got the number, and we should get a drop, but what happened is we got a bullish leg. So for traders, this is a reminder that context and underlying details matter just as much as the headline figure when interpreting forex market reactions. Okay, next let's go over to the previous week global market trends, and I'm going to discuss the euro dollar and US dollar Swiss franc. Okay, let us start with euro dollar currency pair. Regarding the euro dollar currency pair, price action went up, it bounced from the support area, and now it seems to me euro dollar is going to start the decline. Next one is the US dollar Swiss franc. US dollar Swiss franc price action is trying to rise up over here, and if we get a bullish breakout above this old swing high at 0.8212 level, then the chances are high that we might get further upside. So if euro dollar is going to drop, and the way I see it's probably going to drop, then expect a bullish price action inside US dollar versus Swiss franc currency pair. Okay, next let's go back to the PowerPoint. Now I'm going to discuss the current week macroeconomic events and data releases. So I'm going to do the current week fundamental analysis. The first one is the unemployment rate in Australia, and I'm going to discuss the Aussie dollar currency pair. Date is August 14th, 2025, and 1:30 a.m. That's the time in UTC. Second one is the retail sales M over M related to USA, and we're going to discuss the euro dollar currency pair. The date is August 15. The time is 12:30 p.m. UTC time. Now, let's talk about the first macroeconomic event in data release. That's the unemployment rate in Australia. So what is the unemployment rate? The unemployment rate measures the percentage of Australia's labor force that is unemployed but actively seeking employment. It is a key indicator of the overall health of the labor market and broader economic conditions. The Reserve Bank of Australia, RBA, closely monitors labor market data when deciding on interest rate policy. A falling unemployment rate often signals robust economic activity, potentially leading the RBA to maintain or tighten monetary policy, a scenario that typically supports the Australian dollar. Conversely, a rising unemployment rate can indicate economic slowdown, which may prompt the RBA to ease policy, generally weakening the AUD and pushing the AUD USD currency pair lower. Now, on August 14th, the upcoming unemployment rate report. So basically, the July number is going to release on this month of the August. So this is basically the previous month number, the status of previous month that we are going to get it in the month of August. Same goes like the August month numbers are going to release on next month, which is the September. Okay, so the previous number, the unemployment rate number that we got in Australia is the previous number was 4.3%. The forecast is 4.2%. The actual data not released yet. Now, the market expectations. The forecast points to a slight improvement in the labor market, with the unemployment rate expected to edge down from 4.3% to 4.2%. This suggests modest optimism in Australian economy about hiring momentum, although broader global economic headwinds and domestic cost pressures remain key concerns. Market participants are on alert for any surprises in the data, as even a small deviation could influence the short-term trajectory of AUD USD currency pair. and shape expectations for the Reserve Bank of Australia's upcoming policy decisions. Now, I am going to discuss some potential scenarios, and let me also show you the chart of AUD USD currency pair. So right over here, this is the Aussie dollar currency pair. Here's the chart. Seems to me AUD USD is trying to drop over here. Now, the scenario number one is the unemployment rate is lower than expected, 4.2%. So the interpretation is a stronger than forecast reading would point to solid job creation and a resilient Australian economy, potentially reducing the urgency for the Reserve Bank of Australia to cut interest rates. The market impact, the AUD likely strengthens, pushing AUD USD higher as traders price in a more hawkish Reserve Bank of Australia stance. The scenario number two is unemployment rate matches the expectation. So the forecast is 4.2%. The previous number was 4.3%. Okay. Now let's say the actual number that we get on August 14 is we get the 4.2%, so it matches the forecast. Then what is going to happen? Well, if the data release is in line with the expectation, with the forecast, that would confirm steady labor market conditions without signaling any major shift in economic momentum. Now, the market impact is AUD USD reaction may be muted or probably go sideways, with traders focusing on other economic indicators such as wage growth or participation rates. Okay, the third scenario is unemployment rate is higher than expected, 4.2%, meaning greater than 4.2%. If we get a higher number, then it means a worse than expected reading could signal weakening economic conditions and rising joblessness, increasing pressure on the Reserve Bank of Australia to consider rate cuts. Now, the market impact, the Australian dollar could weaken, pushing the AUD USD lower as investor confidence in the domestic outlook softens. So the overall analysis is the unemployment release comes at a crucial time for Australia as the Reserve Bank of Australia navigates slowly global growth, fluctuating commodity demand, and persistent inflation concerns. A stronger labor market print could bolster the case for policy stability, while any sign of deterioration may fuel market speculation about earlier than expected rate cuts. So the conclusion is until the data is released, the AUD USD currency pair may remain range bound, guided by global risk sentiment and US dollar dynamics. However, any meaningful surprise in the unemployment figure, whether strong or weaker than forecast, could spark intraday volatility. So forex traders should be prepared for for potential swings and consider the broader economic backdrop when interpreting the outcome. The next one is the retail sales M over M related to USA. Now, what is the retail sales M over M? The retail sales M over M means month over month, measures the percentage change in the total value of retail goods sold in the United States compared to the previous month. It is a leading indicator of consumer spending, which accounts for roughly two-thirds of US GDP. Because consumer activity is a key driver of economic growth, this report is closely monitored by traders, economists, and policymakers, including the Federal Reserve. A higher reading generally supports the US dollar by signaling economic strength, while a weaker figure may weigh on the currency by suggesting slower demand. Now, on Friday, 15th August, 2025. The retail sale numbers, we're going to get it, but let me tell you what we got last month. The previous number was 0.6%. The forecast or the expectation is 0.5%. The actual data not yet released. So the preview and expectations. Markets are expecting a slight moderation in sales growth from 0.6% in the prior month to 0.5% in July. Now let me show you the chart of euro dollar currency pair as well. This is the chart of euro USD, and seems to me euro dollar is trying to drop. While the figure remains positive, the slowdown may reflect cautious uh, consumer spending aimed persistent inflationary pressures, high interest rates, and tighter credit conditions. Forex analysts note that retail activity has remained resilient despite these headwinds, but the pace of growth is showing signs of cooling. Potential market impact on euro dollar. If retail sales are higher than expected, meaning greater than 0.5%, a stronger reading would indicate robust consumer demand and could reinforce expectations for a higher for longer Federal Reserve interest rate stance. This may boost the US dollar, potentially pushing the euro USD lower. If retail sales match expectations 0.5%, this means a result in line with forecast may trigger a muted market reaction, with euro USD likely trading sideways unless paired with other key US economic data or Fed commentary. If the retail sales are weaker than expected, meaning less than 0.5%, then that's a softer figure, and this may fuel concerns about a slowdown in the USA economic growth, increasing bets on potential Fed rate cuts in the coming months. This could put a pressure on the US dollar and lift the euro dollar currency pair. So the overall analysis is, with inflation showing gradual signs of easing, but the labor market still relatively tight, this month's retail sales report will help shape market expectations for future Fed policy moves. Stronger data could bolster the case for maintaining restrictive rates, while weak numbers may revive decisions about policy easing. So the conclusion is, ahead of the data release, the euro dollar may trade within a narrow trading range as forex investors position for the data. Once published, the report could trigger significant volatility, particularly if the numbers deviate sharply from expectations and shift the interest rate outlook. Okay, next one, let us talk about the current week global market trends. So I'm going to discuss the euro dollar, and then we'll discuss the British pound versus US dollar. So let's go over to the euro dollar. So this is the price chart of euro USD currency pair. And the way I see, market dropped, and then we got a pullback, and market is probably going to drop more over here. I don't think price action is going to stop over here. Expect more weakness in price action. Next one is the pound dollar GBP USD currency pair. You can see GBP USD currency pair price action is going up. It looks bullish, and the way I see, market is probably going to rise up more. So the US dollar is showing signs of weakness if you take a look at GBP USD currency pair. Now, if you take a look at euro dollar, the United States dollar is actually showing signs of strength over here. Okay. Next one, we have the US dollar versus Canadian dollar, USDCAD. Okay, let us take a look at USDCAD currency pair. USDCAD currency pair price action is trying to rise up over here. Okay, so if USDCAD is going up, then it means the United States dollar is becoming strong and the Canadian dollar is becoming weak. So this is the 4-hour time frame, and the way I see market is trying to move sideways over here. This was a drop in price action, and then we got another leg to the upside. Next one is the spot gold. Let us take a look at spot gold, XAUUSD pair. The spot gold is basically trying to drop over here. So if spot gold is going to drop, then it means expect overall strength inside US dollar, because this is the gold versus US dollar pair. So if gold, the XAU USD pair is going to drop, then it means gold is going to become weak, the rate of gold, and the United States dollar is going to become strong. Okay, so was the analysis. If you have any questions or comments, feel free to type inside the chat box and I will be happy to answer your questions. So let us review what we have learned today. Okay, we discussed about the unemployment rate in Australia, and then we also discussed the retail sales. Then we discussed the euro, GBP, USDCAD, and spot gold pairs. What you should do next? Well, stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. And if you want to learn more about trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar on Tuesday, August 19, 2025 at 12 p.m. UTC time.